Hello and welcome to this week's edition of the program Business Time, a magazine program in which we bring you major business and economic news stories making headlines in the country. And my name is William Kumwembe. In the program today, we look at Malawi's positioning to be competitive in trading with partners under the African Continental Free Trade Area, as the country is perceived as a dumping site due to its squeezed production capacity. And also in the program, we speak to officials from the Malawi Fertilizer Company in as far as preparedness for the next production season is concerned. That's inside Business Time. Hello and welcome. This is Business Time and my name is William Kumwembe. In our main story in the program today, for quite some time, Malawi has been a net importer despite its attempts to ensure that it turns into a predominantly producing and exporting nation. Recent figures indicate that the country for a year has been importing goods worth $3 billion compared to exports worth $1 billion, creating a $2 billion deficit. Now, it is more scaring as the country is into the African Continental Free Trade Area, a thing that is seen as a threat to the already squeezed production base of Malawi, which others are saying it will turn into a dumping site. But what has Malawi done this far to be as competitive as peers?
Earlier in 2021, Malawi, like most regional peers, deposited the African Continental Free Trade Area Rectification Instruments to the African Union. The agreement brings together all the 55 member states of the AU, covering a market of more than 1.2 billion people, including a growing middle class and a combined gross domestic product of more than 3.4 trillion US dollars. But Malawi might be entering the market puzzled, especially that already for years it has been perceived by peers as a dumping ground for low-value commodities. The country, relatively undersized when compared to neighbors Zambia, Tanzania, and Mozambique, is ironically the destination of 1,000+ imports compared to the number of commodities it produces for the export market. It continues to suffer from a negative trade balance due to insatiable appetite for foreign goods and continued reliance on imported inputs for production. To reverse the situation and boost exports, in 2012, the country rolled out the 5-year National Export Strategy, whose core objective was to develop 3 priority clusters, namely oilseeds products, sugarcane products, and manufacturers. It targeted to raise exports as the share of imports from 51.5% in 2011 to 75.5% in 2017 and also 93.4% in 2022. Figures presented at the recent Economics Association of Malawi Symposium in Lilongwe show that Malawi needs $3 billion per year to finance its import bill, but only generates $1 billion. Latest figures from the Treasury, for instance, show that the country's merchandise trade balance worsened from 520 billion kwacha in 2016 to 797 billion kwacha in 2021, with imports jumping from 1.02 trillion in 2016 to about 2.06 trillion in 2021. During the same period, exports jumped from 64.8 billion kwacha in 2016 to about 1.26 trillion kwacha in 2021. Economists feel as the local industry remains in its infancy stage, and this poses a great threat to the economy.
The initiative is very good because it is giving the opportunity for us to find the market. There must be a market for the commodities that we produce. And also we need to know what is it that other people elsewhere are looking for. But we should not be, pain excited just to sign and then we are happy we have signed this pact and we can make reference to it in some journal articles. No, we need to go beyond that. It's something that demands action. So if we are going to live the way we have lived the past maybe 60 or so years, nothing is going to change. We are still going to be a dumping ground for many other commodities from other places within the African region.
Agriculture products continue to weigh heavily in Malawi exports basket, with tobacco, sugar, and coffee accounting to over 70%. But the Ministry of Trade and Industry says Malawi remains systematically positioned to make the most of the available opportunities under markets like the AfCFTA. The ministry has since outlined about 10 key commodities which, according to its spokesperson, Maesom Sokera, have a comparative advantage in some of the member countries and have export potential.
As the ministry, we carried out extensive consultations before ratifying this agreement, and also we analyzed the impact of being party to this agreement before we ratified. And the outcome of the consultations really shows that Malawi stands to benefit from this AfCFTA in the sense that it will expand the market of our products. When we made an assessment of the potential destinations of our products, we discovered that we are in a better position to export, products like sugar, tobacco in North Africa, the oil seeds, and many other products, particularly in the North and West Africa, because these are the new markets that have been created.
If fully implemented to harmonize investment and competition rules, the trade pact could boost regional incomes by 9% to $571 billion by 2035. But how set is Malawi to attract investors into the manufacturing and other sectors of the economy? A few weeks ago, President Lazarus Chakwera launched the private sector labs with optimism to improve productivity and competitiveness of local commodities on the international market.
Now, one of the key materials Malawi imports is fertilizer, which is key in as far as the country's agriculture sector is concerned. Unfortunately, prices of the commodity on the international market have been rising due to the war in Ukraine. The question is, how prepared is Malawi to still survive amid the volatility of the situation on the global trends? We have a company that blends fertilizer in the country, the Malawi Fertilizer Company. We caught up with one of the officials there to find out how prepared are they for the season ahead.
We're a contributor. There's many fertilizer companies. You've got SFF that's done a phenomenal job in the past. So our functionality is very much as a wholesaler. So we look at supplying a lot of different companies. Farmers World, Agora, Chapico, SFF, all the other companies within the market. There's geopolitical issues that we cannot control. But what I can tell you is that we're doing everything in our power to be able to have sufficient within our means. As us being a net importer of fertilizer, innovation is most probably going to be our future. There's a lot of new technologies coming out, but it does take time. It doesn't happen overnight. It takes investment. It takes people to come together to have a similar vision, to be able to look at alternatives. I believe the world markets will stabilize. I think we've seen a very volatile. We went through COVID, then Russia, and the conflict in the Ukraine. It's created an exceptional situation as such. Fertilizer prices, I believe, over the medium term will come back to more sustainable levels. And in the interim, we must start to dream big. This is a big dream. But here you see it as a reality. We sometimes limit ourselves in terms of how big we dream. If you're going to build something, we want to say, how cheap can we do it? We need to look at the best. We need to be a pillar. This facility has the capacity to export to Zambia. Malawi has got a direct link with the Nacala port. Can you understand that from a strategic perspective, it's critically important, not just for Malawi, but for the region as such. So I'm saying dream big. And if you communicate that, somebody will buy into your vision. Like my apologies. As FDH has said earlier on, it took a lot of convincing, but they gave us the money eventually. And today, the facility is standing. So never give up on your dreams.
Remember, this is Business Time, a magazine program in which we bring you major business and economic news stories making headlines in the country. We'll be right back, and when we get back, Malawi Stock Exchange listed Press Corporation says it has found a partner to invest in the energy sector in the country. That's when we get back inside Business Time. Welcome back. This is Business Time, a magazine program in which we bring you major business and economic news stories making headlines in the country. And moving on with the program, Malawi Stock Exchange listed Press Corporation says it has found a strategic partner with whom it intends to partner in investing in the country's energy sector. The company is targeting solar power generation, and this was said during the company's AGM in Blantyre on Monday. Our journalist, Justin Kweo, attended the annual general meeting and has filed this report.
The power plant will be a new venture for the conglomerate, which so far has subsidiaries in banking and finance, telecommunications, ethanol production, and food processing, among others. According to PCL board chairperson Randison Mwadiwa, the project is still in its scoping stage. Therefore, the amount of investment is yet to be determined, but preparations are moving fast.
We are looking at energy. Right now, we are discussing with government for a 50-60 megawatts solar power generation around Nkoma. That's where some of the money is going to go. We are also talking of investing, like I said, in feed mill at Madeko, or the fish company. And also we are looking at the ramp-up project. So we have quite a number of projects that we are looking at, but currently where we have moved forward is the solar company, the solar project, and of course the ramp up and the feed mill in Madeko. Well, what we are hoping for, like in Madeko, for example, we are hoping that we will get some investors who will take a sizable share in the process. We are looking for a technical partner for both the mill and a technical partner on the production side of fish. So that's what we are doing. On the energy side as well, we are working for, we are looking for partners. Well, we are currently working with a partner from Israel, but we don't know how far we will go with the entire project. But the intention is that we should have technical partners in these new investments. Our subsidiary National Bank performed extremely well, and also TNM did perform very well, and really the profits that we are talking about are attributable to those two companies. Of course, we did have a little bit of profits from Prescan and the ethanol company, but like we said, some companies didn't really make it, especially the foods company, which is normally known as Madeko, has posted some losses. MTL is also posted some losses. So all in all, we can say we did very well, but one would have wished that even these other companies did well as well.
The group of companies also announced during the event that apart from the energy investment, the conglomerate will also venture into construction and fish food production. Stakeholders were also told that the group has disinvested its 20% stake in Castel Malawi and has sold People's Trading Center to Tafika Holdings, and it has disposed of its 80% shareholding in MTL to Malawi government. During the year ending December 31, 2021, the group of companies reported a profit after tax of 45.1 billion kwacha from 19.9 billion kwacha in 2020, representing 126% increase in profit after tax between the 2 years. During the AGM, stakeholders agreed to pay a final dividend of 2.4 billion kwacha, representing 28 kwacha per ordinary share from 3 billion kwacha in the preceding year, which represented 25 kwacha per ordinary share. Commenting on the performance, one of the stakeholders, Frank Harawa, expressed happiness in getting that it is impressive to see a company paying such dividends in the current economic times. Harawa, however, added that the company should put up more strategies that will help its subsidiaries to make more profits and contribute to the development of the country.
There are many concerns about our company. That's the Press Corporation. Others they have termed it as a sleeping giant. Others they have termed it as deceased estate. I think because of some of the things that happen within the company, which we are now challenging. Like we're talking about the issues of the Madeco not performing well. It doesn't make sense to anyone if I tell them that Jambo is not making profits. And you talk about the PTC itself. It doesn't make sense still that now we have lost the PTC company. So these are the concerns, and even selling of some of the companies that are profitable, it's a concern to the shareholders, and we believe that maybe Press Corporation now will wake up because they have done few things to revive the company. So we believe maybe the company will turn around properly and make real good profits and become the Press Corporation that we all know.
Press Corporation is a public listed group of companies that has subsidiaries such as National Bank of Malawi, TNM, Ethco, Madeco Fisheries, Max Steel Malawi, and Press Properties. The group's controlling stake of 47.58% is owned by Press Trust, seconded by Old Mutual Life Assurance Company Limited at 16.29%, then Standard Bank of South Africa at 0.37%, while the public holds 35.76%.
Now, moving on to other business news, Nico Group says it remains optimistic in as far as its business is concerned amid a volatile operating environment. This was said by Group Managing Director Vizenge Kumwenda when he faced the company stakeholders in Blantyre on Monday. We caught up with Vizenge Kumwenda.
The purpose of having this stakeholder engagement meeting is actually for us to engage with our stakeholders and explain how the group is doing and the outlook where the group is going, and then to give our stakeholders an opportunity for them to ask questions or indeed seek clarification on some of the things that they may have seen happening. These stakeholders include shareholders who are interested in our operations as an investor. It also includes service providers like stockbrokers and asset managers who invest on the stock exchange. And this forum gives them the opportunity to better understand our performance, our business, so that they're in a position to, for instance, recommend how investors should look at our shares on the stock exchange, for example. The first half, it was a tough one, but I'm glad to say that we are on course, to achieve what we planned for the first half, and it is for this reason that in terms of the Malawi Stock Exchange rules, because we're listed on the stock exchange, we've made an announcement that we expect our performance for the first half of 2022 to be better than the first half of 2021 by no less than 35%. So that's an indication that the despite the challenges, as a group, we've done well. And this is a reflection really of the services that we offer to our clients, in the sense that I think our clients are finding value in the services that we offer them. That's why we have more clients, or you have clients taking up more of our services, and so on.
Well, that interview also brings us to the end of today's edition of the program Business Time, a magazine program in which we bring you major business and economic news stories making headlines in the country. On behalf of the entire production team, my name is William Kumwembe. Always remember, if it doesn't make money, then it does not make sense. Stay safe and bye for now.